Okay, let's dive right into this on the real cost of credit card rewards points. We all know that incredible dopamine hit, right? The absolute thrill of logging into your account and seeing enough points for a free flight, or watching your cashback balance climb up and up. It literally feels like magic. It feels like you're somehow beating the system, because technically you didn't pay anything extra to earn those points. But here is the fascinating reality we're going to unpack today. Someone is absolutely paying for that reward. We really need to dissect this illusion of free rewards, because if we want to figure out how to calculate real value, we have to recognize that the math behind your points is way more complex and honestly a lot more surprising than the banks want to advertise.
So, who actually pays for your free flight? It's a simple question, but man, it fundamentally shifts how we need to look at our wallets. Think about it. If the credit card company is just handing you hundreds of dollars in travel perks or cash, that money has to originate somewhere, right? It doesn't just magically materialize out of thin air. To truly understand how to calculate the real value of your points, we first have to pop the hood and look at the hidden engine power in this entire global system. And that hidden engine is called the interchange fee. Basically, this is a percentage that card networks charge merchants on every single transaction you make. You can think of it like an invisible toll booth sitting at every cash register. Whenever you tap or swipe your card, the merchant has to give up a little slice of that sale straight to the card network. This fee is the logical foundation here. It's the primary funding source for the entire rewards ecosystem. It's definitely not a generous bank giving you a gift. It's a structural fee built right into the transaction itself. But here's the thing. Merchants operate on super tight margins. They absolutely cannot just absorb that fee without eventually going out of business. So they do exactly what any logical business would do. They just build that fee into their overall prices. Rather than charging credit card users a specific annoying premium right at the checkout counter, they just raise the price of goods for everyone. That means the cost of your specific rewards program is secretly baked into the price of the groceries, the clothes, and the coffee for every single person shopping at that store, completely regardless of how they happen to be paying. And this brilliantly illustrates a pretty uncomfortable inequity. Think about a cash payer. They are paying those artificially inflated retail prices that have the interchange fees baked right in, but they receive absolutely zero rewards in return. Nothing. Now compare that to a premium cardholder. They pay the exact same inflated price at the register, but they get a disproportionate amount of rewards flowing straight back to them. The prices rise for absolutely everyone, but the benefits for sure do not. When you look at the research on this specific mechanism, it reveals something pretty profound. This setup causes a systemic wealth transfer from lower-income, cash-paying households right toward higher-income, rewards card-using households. Now, I want to be very clear here. We are looking at a systemic effect, okay? A structural redistribution. Using a rewards card doesn't make any individual person a villain. Most people have literally no idea they are even participating in this cross-subsidization. But mathematically speaking, the overall pool of what everyone pays is just being redistributed upward.
You might be wondering, why does it flow specifically toward higher income brackets? Well, it's because of the structural barriers of the cards themselves. Premium rewards cards aren't just handed out to anybody. They require excellent credit scores. They very often carry steep annual fees. These barriers naturally exclude basic debit and cash users, which effectively concentrates the rewards among folks who already have higher incomes and pristine credit. It's basically a closed loop where you have to already be financially established to reap the benefits of the higher prices that everyone else is also paying.
Which brings us right back to this lingering, powerful question. So, if the bank isn't paying for your flight, who is? The answer is everyone at the grocery store who is paying with cash or a basic debit card. They are literally subsidizing your points. But you know what? That systemic cost is only half the story. To truly calculate the real value of your rewards, we have to look closely at the behavioral cost, because this whole system is also carefully designed to trick your brain.
There is this amazingly well-documented finding in behavioral economics that perfectly captures this phenomenon. Credit card spending feels less real than cash spending. Just swiping a little piece of plastic simply doesn't trigger the same psychological friction, that same ouch factor, as handing over physical paper bills. The payment just feels less real, and that creates a massive, massive vulnerability in our personal finances.
And trust me, credit card companies know this. That is exactly why rewards programs specifically amplify this psychological effect. They use gamification. All those bonus categories and purchase thresholds, they are designed to actively encourage you to spend more just to maximize the reward. Be honest, have you ever added a random $15 pair of socks to your online cart just to hit a spending bonus?
Yeah, that is your brain completely falling into a behavioral trap. You're spending real, hard-earned money you hadn't planned to part with just to hit some arbitrary goal for imaginary points. And if you fall into that trap and end up carrying a balance, wow, the math turns brutal really fast. For the meaningful share of cardholders who carry a balance and pay interest, the value of any points earned is completely 100% obliterated. The interest charges on typical rewards cards usually far exceed the cashback or points you earned on that exact same spending. In that scenario, you're essentially buying your own points at an astronomical markup. So, facing all of this, the systemic wealth transfer we talked about, these sneaky behavioral traps, the crushing interest rates, we have to step back and ask, are rewards cards always a bad idea? Should we just cut them all up right now and go back to cash? Well, the answer is actually no. There is a way to genuinely benefit, but it requires a very specific approach and some pretty strict discipline to navigate this complex system.
The math genuinely works in your favor, but only if you fit a highly specific profile. You absolutely have to pay the full balance every single month. You must not alter your normal spending behavior just to chase bonus categories. And you must only buy what you are totally going to buy anyway. For this exact type of user, a rewards card actually functions as a modest, genuine discount on inevitable spending. You aren't playing a game to win, you're just capturing a slight little rebate on your normal everyday life. So let's turn this into an actionable plan. Because figuring out if you actually fit that profile requires doing some honest math. We've distilled the research into a simple 3-step framework, so you can learn exactly how to calculate the real value of your points. This is how you cut right through the glossy marketing hype and see what your card is actually doing for your wallet. Step 1 is the absolute, non-negotiable foundation. You have to confirm that you are paying the statement balance in full every single month, 0 exceptions. If interest is ever charged, it overwhelmingly exceeds the reward's value. Frankly, if you pay even a single month of credit card interest, you have very likely wiped out the net benefit of your rewards for the entire year. So, any honest evaluation has to start with 0 interest.
Step 2 requires a little bit of uncomfortable self-reflection. You need to track your altered spending. If you made a purchase that wouldn't have happened normally, or if a purchase was larger than you originally intended, just because you had a bonus threshold in the back of your mind, you have to subtract that extra amount from the reward's real value. Think about it. If you spent $50 you didn't plan to spend just to get $10 in cash back, you are down $40, not up 10.
And finally, step 3. You must honestly factor the card's actual annual fee against your genuinely earned rewards. And I really want to emphasize this part, not the advertised maximum. Card marketing always assumes you are maxing out your spending in every single bonus category, which is way above what a typical household actually spends. Don't use their fantasy numbers. Subtract the annual fee from the rewards you actually generated based on your normal, boring habits.
So, the crucial point is this. You have to stop looking at the advertised value. That number assumes maximum spending and 0 interest. It's an illusion. Instead, you need to calculate your real value. That is your total rewards, minus any interest you paid, minus your annual fees, and minus any altered, unplanned spending. That final number? That is the true, honest net worth of your card.
Let's just cement the core takeaway from all this data. Rewards points were never free. They never have been. They're a systemic redistribution system funded by hidden interchange fees that are baked into the everyday retail prices that absolutely everyone pays. And by design, that system happens to flow disproportionately toward folks who are already financially positioned to benefit from it. This system exists, and it's quietly running in the background of every single purchase we make. Whether it actually works in your favor depends entirely on your own discipline, not on that glossy mailer the bank sent you. So I'll leave you with this final thought. Have you ever actually calculated whether your rewards card is genuinely worth it? Take our 3-step framework, pull up your last 3 bank statements, and run the real math for yourself. The answer might just change how you pay for absolutely everything. Thanks so much for joining me, and keep questioning the math behind the magic.